Welcome to the Shifted Ledger, the podcast where we break down how to make your workflow more efficient. Usually when we talk about something like a medical diagnosis, there's this expectation of just absolute precision.
Oh, yeah, completely.
Right, like think about anatomy or engineering. You break your arm, the x-ray shows that jagged white line on the bone, and the doctor just points and says, well, there it is.
It provides this really comforting binary, like broken or not broken.
Exactly.
We naturally gravitate towards systems where things are visible, where they're categorized, and just neatly defined by clear boundaries.
But then you step into the world of corporate accounting, and for the longest time, it actually felt a lot like that x-ray.
It really did.
You had a general ledger, you had your debits on the left, your credits on the right, and everything had to balance perfectly, like down to the penny. It was deeply deterministic.
And incredibly manual.
Yeah, completely manual.
Aye.
If there was a flaw, you literally traced the paper trail until you found that one missing digit.
Which would take days.
Oh, easily. But suddenly, for anyone working in finance today, and if you're listening to this, you are probably feeling this tremor right now. That old manual x-ray machine is just being hauled out of the building.
Thrown in the dumpster, basically.
Pretty much. We're looking at a financial landscape that is moving so incredibly fast. It's transitioning from just looking backward at what happened last quarter to actually generating real-time, predictive, strategic insights before the quarter even closes.
And the crazy part is, it's all being powered by autonomous AI agents.
Which is exactly what we're exploring today. The focus of today's show is the AI-powered ledger, Gemini in corporate accounting.
It's a huge topic.
It's massive. So whether you are a staff CPA grinding your way through a grueling month-end close, or, a finance student wondering what your daily career is actually going to look like when you graduate, or even a business owner trying to figure out how to leverage your data without hiring an army of consultants, this is for you.
Because corporate accounting is being fundamentally rewired.
Rewired is a great word for it.
It captures the scale of the transition, I think. We aren't simply bolting a new software feature onto an old spreadsheet.
Like a slightly faster Excel macro or something.
Right, exactly. The very nervous system of how your financial data moves, how it's synthesized, and how decisions are made, it's all changing from the ground up.
So here is the blueprint for our journey today. We're going to explore how Google Gemini Enterprise is driving this rewiring across the entire accounting ecosystem.
But we aren't just going to float around in abstract tech concepts, right?
No, definitely not. We want to make this tangible for you. So we're going to look specifically at how it transforms the daily workflows of three distinct roles: the staff accountant, the controller, and the chief financial officer.
Mapping this to specific roles is just crucial, because the impact of this technology looks vastly different depending on where you actually sit in the organization.
Yeah, the day-to-day is totally different.
But the underlying thread here is that this isn't just about giving people a slightly smarter calculator, or even a better linguistic processing tool that can write a polite email to a client.
We are way past linguistic parlor tricks at this point.
Way past it. What we are talking about today involves multimodal agentic workflows.
Okay, let's unpack this. Because multimodal and agentic are, well, they're pretty heavy terms. Let's define those right out of the gate so everyone is on the same page.
Sure. So multimodal means the AI model doesn't just understand text in a vacuum. It can simultaneously process, cross-reference, and reason across text, images, charts, graphs, and code.
So it's not just reading words.
Exactly. Think about an invoice you get from a vendor. To a standard computer, traditionally it's just a grid of pixels.
Okay, just an image file.
Yeah, but to a multimodal AI, it's a visual document with spatial relationships. It understands that the number in the top right corner is the invoice number, and the number at the very bottom is the total due.
Even if the formatting is completely weird or non-standard?
Even if it's completely non-standard. But the bigger, much more disruptive shift is that second word, agentic.
Right, agentic AI.
We're moving away from AI that you just chat with, where it sits passively in a browser tab just waiting for your prompt. Agentic AI can actively reason. It can plan multiple steps ahead and orchestrate actions across various different software platforms to achieve a really complex goal.
Which brings us perfectly into our first major area of focus, which is the AI infrastructure itself. Like, what actually is Gemini Enterprise in the context of corporate finance? Because it can't just be a chatbot window you keep open next to your accounting software.
No, it's far more integrated than that. At its core, Gemini Enterprise is a highly secure platform that integrates Google's cutting-edge Gemini 3 models, directly into the workspace environments that finance professionals already live in every single day.
So we're talking about Google Docs, Sheets, Meet, Gmail.
Exactly. But it doesn't stop at the edge of the Google Workspace suite. That would be way too limiting for a modern enterprise. It acts as a bridge, securely connecting to your massive enterprise data repositories.
Oh, so it reaches into other systems.
Right. It reaches into your enterprise resource planning systems, your ERPs like SAP or Oracle. It connects to your customer relationship management systems like Salesforce and your data warehouses like Google's BigQuery.
So the crucial takeaway for you listening is that it's not a standalone app you have to log into separately.
No copying and pasting required.
Right. You aren't constantly copying data from your ERP, pasting it into the AI, and then copying the answer back. It lives natively right where your data lives.
And this is where that agentic AI concept becomes highly practical. Gemini Enterprise provides no-code and low-code tools that allow users, meaning actual accountants and finance managers, not just software engineers, to build custom AI agents.
Wait, accountants are building their own AI agents?
Yes, custom agents designed to automate incredibly complex multi-step workflows that used to require a human project manager to oversee.
I think we really need to draw a hard line here between the old world of automation and this new world. Because for the last decade, when accountants heard automation, they thought of bots.
Right, robotic process automation, RPA.
Exactly. An RPA script basically just mimics human clicks. It clicks cell A1, copies the value, switches windows, and pastes it into cell B2.
And that distinction is paramount, because a traditional RPA bot is incredibly brittle.
Brittle how?
It follows a rigid, rules-based script. It might automate the transcription of a specific tax form flawlessly thousands of times, sure, but if the IRS updates that form and moves the total income box down by a single inch,
Oh, the bot just breaks.
it completely breaks. It continues clicking the old coordinate, copies the wrong data, and corrupts your database. An agent, on the other hand, possesses actual semantic reasoning capabilities.
So it knows what it's looking for, not just where it should be.
Exactly. It collaborates across workflows. It can simulate scenarios. An agent can take an ambiguous request from a controller, break that request down into logical subtasks, execute those tasks across different platforms, evaluate its own results for accuracy, and produce outputs that are structured and ready for regulatory review.
And looking at our sources, there's a specific protocol making this cross-platform collaboration possible. The agent-to-agent, or A2A protocol. How does that actually function in a corporate environment?
Think of A2A as an open standard, basically a universal diplomatic language for AI agents.
A diplomatic language, I like that.
It allows an agent built within Gemini to securely communicate, negotiate, and coordinate with agents living on completely different enterprise platforms.
So give me an example of that.
Imagine your company has an HR agent living inside Workday, an IT service agent living in ServiceNow, and a sales agent living in Salesforce. Historically, those systems were walled gardens, right?
Yeah, getting them to talk was a nightmare.
But with A2A, your finance agent in Gemini could autonomously query the Salesforce agent for real-time, probability-adjusted pipeline data.
Wow.
Then it could simultaneously query the Workday agent for projected Q3 headcount costs, synthesize all of that disparate data, and build a live, dynamically updating budget forecast in a Google Sheet.
The silos are just completely evaporating. You don't have to email the VP of sales to ask for an Excel export of the pipeline anymore.
Your agent just talks to their agent.
That is wild. And the tools within Gemini Enterprise reflect this deep integration. For example, the sources highlight a feature called Gemini Deep Research.
Deep research is a fascinating application of this agentic reasoning. Imagine you're an analyst tasked with synthesizing a multi-page due diligence report on a potential acquisition target.
That's usually days of manual searching, reading, highlighting.
Right. Deep research doesn't just do a quick superficial web search and summarize the first 5 links. It autonomously browses the web, but it also, if you grant the specific permissions, of course, digs through your internal Google Drive, your historical Gmail threads, and your internal chat logs.
It checks your own company's history on the topic.
Exactly. It iteratively gathers information.
Huh.
The interface literally shows its thoughts in a reasoning loop, figuring out what gaps exist in its knowledge, formulating new search queries to fill those gaps, and continually refining its understanding before it writes a comprehensive cited report.
And there's also Notebook LM, which has been making massive waves lately.
Oh, it's incredible.
It allows users to upload vast amounts of complex source material, say a 200-page regulatory filing, and you can interact with it organically. You can query it, organize it, and even have it generate podcast-style audio briefings to listen to on your commute.
It changes how we consume dense financial data completely.
But to make this really concrete for the listener, let's talk about the cost of entry, because everything we are describing sounds like billion-dollar sci-fi infrastructure, but it's a packaged enterprise product you can buy right now.
Google has structured the pricing tiers quite clearly to democratize this access. You have the business edition, which starts at $21 per user per month.
$21.
Yeah, that's aimed at small to medium businesses or specific agile teams within a larger enterprise. And it requires virtually no complex IT setup to get started.
Okay, what about the big players?
Then, for larger organizations that require advanced IT administrative controls, guaranteed data residency, and enterprise-grade security structures like VPC service controls, you have the Standard and Plus editions starting at $30 per user per month.
Okay, $30 a month for a tool that can reason across platforms, read 200-page PDFs, and write due diligence reports. I'm going to introduce an analogy here because this is where my brain naturally goes.
Let's hear it.
Implementing Gemini isn't like installing a new version of Microsoft Excel or like updating your antivirus. It is not a software upgrade. It sounds exactly like hiring a tireless, lightning-fast junior staffer.
A digital teammate, essentially.
Right. A junior staffer who has memorized every accounting standard in existence, never sleeps, never takes a coffee break, and costs $30 a month.
It functions precisely as a digital teammate. And when you frame it that way, you begin to see how disruptive it is to the traditional firm structure.
But I have to push back on that idea a bit. Let's say I hire a brilliant, eager junior staffer fresh out of a top university. They have all the book knowledge, but they still need a manager,
Yes,
right?
of course.
They lack historical context. They don't know the unwritten rules of our oldest client or the subtle, informal nuances of our specific supply chain. How do we stop this incredibly fast $30 a month digital junior staffer from making massive, high-speed rookie mistakes?
You've hit on the exact reason why human accountants are not being replaced.
Okay, good.
Rather, their roles and their requisite skill sets are fundamentally shifting. To understand this, we have to look at how the industry is currently moving away from what we call a pyramid workforce model.
Okay, so picture a pyramid. The wide base at the bottom is made up of a small army of entry-level staff accountants and clerks, right?
Yes. In the traditional pyramid, that wide, heavy base of junior staff spends hundreds of thousands of collective hours doing rote manual data entry, ticking and tying spreadsheets and hunting down missing vendor invoices.
It's grunt work.
Above them is a smaller middle tier of managers, whose primary job is reviewing that manual work for errors. And at the very top, you have a few partners or C-suite executives making the strategic, macro-level calls based on the data that filtered up.
But AI is actively reshaping that.
It's aggressively reshaping that pyramid into a diamond model.
A diamond workforce model. Walk us through how that reshapes the office.
The bottom point of the diamond is now very narrow. You simply no longer need an army of entry-level people to do manual data entry because the AI agents, your digital teammates, are automating the vast majority of that rote work. They ingest the data instantly.
Okay, so where do the humans go?
Well, the widest part of your workforce, the fat middle of the diamond, is now composed of a much larger cohort of AI-fluent mid-career experts. These are the managers you were just talking about. Their entire job is to oversee the AI, inject the necessary historical and cultural context, detect the AI's hallucinations, and make the critical, highly nuanced judgment calls that a probabilistic machine simply cannot make.
So we're hollowing out the bottom of the traditional pyramid, but vastly expanding the middle.
Exactly.
The humans move up the value chain. They evolve from being data creators to being reviewers, editors, and strategic supervisors.
The AI generates the first draft of the analysis. The human expert refines it, contextualizes it against real-world ambiguity, and authorizes the final strategic action.
Which means if the workforce is reshaping into this diamond, and if you're listening to this trying to figure out where your career is actually going, we need to look exactly at what is happening at the bottom point of that diamond first.
The foundational work.
Exactly. What happens to the daily life of the staff accountant when the grind gets automated?
The grind is an incredibly accurate word for it.
Yeah.
For decades, the entry-level accounting experience has been defined by repetitive, high-volume, low-complexity tasks.
Like what, specifically?
We're talking about processing thousands of unstructured vendor invoices, manually reconciling complex bank statements against internal ledgers line by line, and preparing the repetitive initial drafts of standardized monthly financial reports.
It's the kind of work that famously burns young accountants out.
It really does.
I mean, it's completely necessary for the integrity of the firm, but it's not why someone spends 5 years at university and sits for a grueling CPA exam. So how does a tool like Gemini actually alter this daily reality? What's the mechanism?
The mechanism is primarily the application of advanced natural language processing, or NLP. NLP is what allows the AI system to understand, analyze, and interpret complex financial data from completely unstructured, messy sources.
Let's define unstructured sources for a moment, because we aren't talking about a neatly formatted, easily importable CSV file here.
Not at all.
We're talking about the real-world chaos of business, like a messy, coffee-stained PDF invoice from a local plumber.
Or an aggressive email thread from a vendor arguing about an early payment discount.
Right, or a massive 80-page scanned PDF of a commercial lease agreement where the scanner caught the pages slightly crooked.
Historically, getting usable data out of those chaotic documents required a human being to sit there and manually type it out. Or they relied on older optical character recognition technology, OCR, which used those rigid templates we discussed earlier.
Right, the brittle bots.
If the plumber redesigned their invoice and moved the total amount due field a quarter inch to the left, the OCR broke and returned an error. But natural language models approach the document entirely differently. They can extract key fields from invoices, contracts, and receipts at accuracy levels exceeding 95%, regardless of the format.
95% accuracy on completely unstructured variable documents. That is staggering.
It is effectively eliminating the keyboard bottlenecks that have stalled accounts payable teams for decades. The AI doesn't look for a pixel template. It understands the semantic relationship of the words and numbers on the page.
So it actually knows what a total is.
It understands the concept of what a total due is, and it can find it whether it's printed at the top, the bottom, or hidden in a paragraph of text.
The sources give us some incredibly specific examples of this in action right now. For instance, they highlight Oracle's bill capture module, which has been embedded directly into NetSuite since early 2024.
That module is a perfect showcase. It uses pre-trained AI models to take a massive batch of PDF bills, hundreds of them, read them, extract the vendor name, the service date, the individual line items, and the total amounts, and then automatically convert them into properly categorized expense entries in the general ledger.
Zero human keystrokes.
No human keystrokes are required from start to finish. The staff accountant simply reviews the final proposed entries for sanity.
And it's not just the giant legacy ERPs doing this either. There's a whole ecosystem of agile startups building entirely new accounting workflows natively on top of Google Cloud and Gemini.
Look at Stacks, for example.
Yeah, that Amsterdam-based startup mentioned in our sources. They built an AI-powered platform specifically designed to attack the monthly financial close process.
The month-end close is notoriously stressful. It is a mad dash to reconcile everything. Stacks uses Gemini and Vertex AI to automate those massive bank reconciliations and standardize the workflows across disparate departments,
Right.
drastically reducing the time it takes to actually close the books.
That's huge.
And what's deeply fascinating from a technical perspective is that 10 to 15% of Stack's actual production code, the software itself, was generated by Gemini Code Assist.
Wait, so the AI is writing the AI software?
The AI is not only executing the accounting tasks, it's actively helping software engineers write the tools that manage the tasks.
It's an exponential feedback loop of efficiency. And for the staff accountant who lives inside Google Sheets all day, Gemini is right there in the sidebar.
Right at their fingertips.
You can ask it in plain conversational English to organize massive data sets. You can say, Gemini, create a pivot table summarizing all marketing expenses by department for Q3 and add drop-down menus for approval status tracking. And it just happens instantly.
You no longer have to Google the exact complex syntax for a nested VLOOKUP or an index match formula.
Thank goodness for that.
But the capabilities extend far beyond just organizing rows and columns. This is where the drafting capabilities of Gemini and Google Docs become truly transformative for a junior accountant's day. We are seeing staff accountants using Gemini to draft the initial footnote disclosures for financial statements, pulling the context directly from the trial balances.
Wait, really? It can actually write the formal footnotes?
Yes.
Those are heavily scrutinized legal texts.
They are, but a staff accountant can provide Gemini with the raw trial balance data and a brief bulleted note about the company's specific accounting policy for that asset, and Gemini will synthesize that into a structured, highly formal draft of the footnote disclosure in a matter of seconds.
That is work that used to take a junior staffer hours of staring at a blank screen, cross-referencing prior year annual reports, and sweating over the exact phrasing.
It also heavily impacts technical accounting memos. When a new accounting standard is released by a governing body, say, a highly complex 40-page update to IFRS or GAAP regarding revenue recognition staff can upload that PDF, ask Gemini to summarize the update in plain English, and have it draft the first version of an internal policy memo explaining exactly how this new rule will impact their specific company's revenue streams.
Okay, I have to ask the elephant in the room question here, because if you are an accounting student or a first-year associate listening to this, your heart rate might be spiking right now.
Understandably so.
If Gemini can parse invoices with 95% accuracy, instantly reconcile massive bank statements, build all the complex pivot tables, write the formal footnote disclosures, and draft the technical policy memos, what does this actually mean for job security?
It's the big question.
If AI is functionally doing 95% of the manual data entry and all of the initial drafting, are staff accountants simply obsolete? Are we witnessing the automation of an entire entry-level generation out of existence?
It is the most common, the most visceral, and arguably the most important anxiety echoing through the profession right now. But to answer it accurately, we have to look closely at the limitations of the technology and the fundamental philosophical nature of accounting itself.
Okay, what do you mean by that?
Well, the sources cite Prashant Ganti, the VP of Global Product Strategy at Zoho. He provides a very clear, grounded perspective on why AI cannot wholesale replace an entry-level human accountant.
I'm all ears. What is his argument for the human?
He points out that for an AI to completely replace a staff accountant, it would have to be able to consistently manage highly ambiguous, undocumented scenarios. It would have to independently keep up with constantly evolving and sometimes politically conflicting regulatory environments.
That's tough for a machine.
And most importantly, it would have to create total transparency in its decision-making that satisfies strict audit expectations.
And AI fundamentally struggles with real-world ambiguity, right?
Immensely. It is crucial to remember that large language models are probabilistic engines. They predict the next most likely word or number based on patterns in their training data. But accounting is not probabilistic.
No, it's deterministic.
Exactly. Accounting often requires absolute determinism and strict adherence to rigid, sometimes completely counterintuitive jurisdictional rules. Furthermore, Ganti emphasizes the indispensable elements of trust, responsibility, and ethical consideration.
And AI doesn't have ethics.
An AI does not have a fiduciary duty.
Yeah.
It cannot be legally bound. It cannot be held legally or ethically accountable for a material misstatement on a public financial filing. A human CPA holds that license and that legal liability.
So the technology acts as a massive augmentation of the role, but human skepticism isn't just a nice-to-have soft skill. It is legally, structurally, and functionally mandatory.
Indiscriminate, blind reliance on AI output in accounting can lead to disastrous, firm-ending errors. We're all familiar with the concept of AI hallucinations, where the model simply invents a fact that sounds incredibly plausible.
Right.
In a creative writing task, a hallucination is a quirk. In corporate accounting, an AI might confidently draft a technical memo that cites a completely fabricated FASB guideline. Or it might miscalculate a crucial materiality threshold because it lacked the broader, unwritten business context, like an impending merger that a human accountant would naturally possess.
So the staff accountant isn't obsolete. Their job just shifts gears entirely. They transition from being a data typist to being a data auditor and an AI supervisor. But that requires a different kind of training. You have to know the underlying accounting rules deeply enough to spot when the AI is confidently hallucinating a fake GAAP rule.
Precisely. They move up into the middle of the diamond much faster than they would have in the old pyramid. And if the junior staff accountant is rapidly elevated to the role of reviewer and editor, it means the person managing the integrity of the entire system, the controller, must adapt to operating at a totally different speed, with a vastly different level of oversight.
Which means we need to look at how that management layer is evolving. The controller is traditionally the guardian of the ledger. They are the ones who sign off and say, yes, these numbers are real.
The buck stops there, yeah.
Historically, a massive portion of a controller's month was spent chasing down individual numbers, ensuring data was entered correctly by the junior staff, and agonizing over the minutiae of the month-end close.
It was a highly reactionary role. The controller's job was essentially finding the mistakes days or weeks after they had already happened, and then scrambling to correct them before the reporting deadline.
But if Gemini is automating the data ingestion seamlessly, and the staff accountants are managing the initial reviews, the controller's daily focus has to fundamentally shift. They are no longer playing financial whack-a-mole, chasing bad numbers.
Their focus shifts away from correction and toward ensuring absolute systemic integrity, maintaining strict regulatory compliance, and achieving incredible speed during the financial close.
And how do they do that?
They achieve this by leveraging machine learning extensively for anomaly detection.
Let's make anomaly detection real for the listener. Because in the old days, to find fraud or errors, a controller might randomly sample like 5% of the month's transactions, look at the paper receipts, and hope they catch something. With AI, you aren't sampling anymore. The AI can look at 100% of the transactions instantly, right?
It fundamentally changes the math of auditing. Machine learning algorithms can ingest vast amounts of historical data and establish a highly nuanced baseline for what normal behavior looks like for your specific company.
So it learns your company's unique rhythm.
Exactly. The AI learns what a typical invoice from a specific steel vendor looks like, what day of the month it usually arrives, the typical variance in the total amount, and who usually approves it.
Right.
When a transaction deviates from that deeply learned pattern, say, it's a duplicate invoice submitted slightly differently, or a sudden payment routed to a newly created vendor bank account overseas, or an expense that technically passes but subtly violates a corporate travel policy, the AI instantly flags it. The system pushes the errors to the controller, rather than the controller having to hunt for them.
It's like looking for a needle in a haystack, but you've been handed a massive electromagnet.
That's a great way to put it.
The sources mention how the Big Four accounting firms are already utilizing this internally and for their Fortune 500 clients, and the metrics are wild.
The results are reshaping risk management. KPMG reported that by using continuous AI-powered auditing, they reduced the time it takes to detect irregularities by 75%. Deloitte improved their overall risk detection capabilities by 60%. We have to emphasize that this isn't a theoretical white paper concept. It is actively, daily preventing fraud and compliance failures in real time across major global enterprises.
Okay, I hear the statistics, but I want to understand the day-to-day workflow. How does a controller actually use Gemini to do this? They aren't sitting at their desk writing complex Python code to build bespoke anomaly detection models. How are they interacting with this intelligence?
This is where we have to dive into a completely new skill set for finance professionals, which is the art and science of prompt engineering.
Ah, prompt engineering.
The way a controller linguistically commands Gemini dictates the entire quality of the output. If you treat it like a simple Google search bar, you will get terrible results. Clarity and structure are the absolute keys.
Walk us through it. If you're a controller listening to this, what is the actual anatomy of a good prompt? How should you talk to the AI?
A highly effective prompt generally contains three distinct elements: context, constraints, and specifics.
Context, constraint, specifics. Okay.
Let's say a controller is trying to understand the nuances of a newly passed tax rule. A bad, lazy prompt would be, tell me about the new tax changes.
Yeah, that's what most people type.
And the AI will give a generalized, rambling, utterly useless response that reads like a Wikipedia summary.
Right, you'll get a wall of text that doesn't help you do your job.
But a highly engineered professional prompt from a controller would look like this. Act as an expert tax advisor. Summarize the tax implications of accelerated depreciation, specifically for a mid-sized manufacturing business owner, in plain language, understandable for a beginner. Limit the summary to 3 key bullet points and highlight any immediate risks.
That is incredibly structured. Context. Act as an expert advisor to a mid-sized manufacturing owner. Constraint. Limit to exactly 3 bullet points. Specifics. Plain language for a beginner regarding accelerated depreciation risks.
When you apply that level of structure, the AI produces highly targeted, immediately usable business intelligence.
That makes total sense.
Let's apply that to spreadsheet analysis. A controller is staring at a massive trial balance with 50,000 rows and suspects something is structurally wrong, but they don't know what. Instead of manually scanning rows for hours, They use the Gemini sidebar in Sheets.
What do they ask it?
A basic prompt is, identify unusual patterns in this spreadsheet. It might highlight a few things, but then they iterate and refine. They prompt. Analyze column D for total spend. Highlight any single transactions exceeding $10,000 that do not have a corresponding purchase order number in column F and generate an explanation for these variances suitable for a jury.
Hold on, suitable for a jury. That is such a specific and fascinating constraint to put on an AI. Why would a corporate controller need an explanation suitable for a jury?
Because controllers, along with forensic accountants, are frequently called upon in high-stakes litigation support.
Oh, of course.
When a company is sued, or there is a massive internal fraud investigation, or even just a contentious board meeting, the financial experts have to explain incredibly dense, arcane accounting mechanisms to stakeholders, lawyers, judges, or juries who have zero financial background whatsoever.
So they are using the AI not just for math, but as a high-level translation engine, taking technical jargon and running it through a filter to turn it into accessible, plain English.
Exactly. The sources provided a fantastic table illustrating exactly how AI translates these complex concepts.
Right.
For example, take the term deferred tax asset.
Right, very technical.
To a CPA, that has a very specific technical meaning regarding overpayment or advance payment of taxes on a balance sheet. But if you explain it that way to a jury, their eyes will glaze over instantly. If a controller prompts Gemini to simplify it for a layperson, the AI might translate deferred tax asset into a coupon for future tax savings.
That's brilliant. A coupon for future tax savings. It takes a purely abstract ledger concept and maps it to a real-world object everyone understands instantly. What's another example of that translation?
Think about a derivative. It is a highly complex financial instrument whose value is reliant on an underlying asset. Very hard to explain quickly. Gemini translates it too, locking in a price on a future purchase to protect against price changes.
It's like having a world-class corporate communications director sitting on your shoulder, helping you explain the reality of the numbers to the rest of the world.
And by stringing multiple AI tools together, perhaps using Gemini to generate the initial simplified analogy, and then feeding that into a tool like Grammarly to rigorously refine the sentence structure, remove passive voice, and ensure the tone is authoritative. Controllers can dramatically speed up their testimony prep or their quarterly presentations to the board of directors.
Here's where it gets really interesting for me. When I look at what the controller is doing in this new Diamond model, they're monitoring real-time dashboards for anomalies. They're ensuring compliance across 100% of transactions automatically. They're translating complex data into narratives for the board. They aren't really doing the books anymore, are they? The fundamental nature of the job has changed. It's like they've become a financial air traffic controller.
A financial air traffic controller is the perfect metaphor for this evolution.
Right, because they aren't flying the planes anymore. They aren't the ones in the cockpit inputting the raw data, calculating the wind speed, or drafting the initial journal entries.
No, they're in the tower.
Exactly. They are sitting up in the control tower, watching the radar, which are their AI-powered anomaly dashboards. They're monitoring the airspace of the entire enterprise, directing traffic, and stepping in instantly to prevent a crash, which, in this case, would be a major fraud event or a massive regulatory compliance gap.
And because they have complete, unimpeded visibility over the entire financial airspace, and because the AI is ensuring the data coming in from the junior staff is perfectly clean in real time, the agonizing month-end close process becomes almost instantaneous.
It just disappears as a pain point.
It becomes a non-event.
Which changes the entire rhythm of the business. Because if you think about it, once the controller ensures the data is flawless and the books are closed instantly, that immaculate real-time data flows straight up to the top of the pyramid. Which brings us to the highest level of this rewiring, the workflow of the chief financial officer.
For the chief financial officer, the advent of multimodal agentic AI is nothing short of a revolution in how they pilot the company. Much like the controller, the CFO is finally liberated from the massive burden of historical reporting.
So no more waiting around.
Exactly. They no longer have to wait 3 agonizing weeks after the month ends to get a static report detailing how the company performed in the past.
Because the data is already clean, it's already reconciled, and it's available on day one.
The CFO's workflow is completely elevated. They move from managing historical ledgers to engaging in predictive, real-time strategic orchestration.
Orchestration, I love that word.
CFOs are now using Gemini Enterprise for massively complex global tasks. We're talking instantaneous global consolidation of multiple international subsidiaries, highly dynamic budget modeling that shifts with the daily news cycle, deep forensic spend analysis across all departments, and incredibly sophisticated predictive forecasting.
Let's talk about that predictive element, because traditionally, forecasting in finance was basically just drawing linear trend lines in Excel, right?
Pretty much.
Like sales went up 2% last quarter in this region, so we will project they go up 2% next quarter. It was inherently simplistic.
We have moved light years beyond linear trend lines. We're talking about predictive modeling that acts almost like a corporate oracle.
An oracle. Give me an example.
For example, an AI agent can forecast severe supplier delays by continuously scraping and analyzing global news events, port strike updates, and global weather patterns.
It's watching the news.
Yes. It can cross-reference a typhoon in the Pacific with your specific shipping manifests, predict exactly how that will delay a crucial component for your flagship product, calculate the downstream revenue impact, and immediately recommend contingency purchasing actions from a secondary supplier in Mexico to protect your supply chain all before the storm even makes landfall.
That is staggering. The sources actually mention IBM Watson achieving a 95% accuracy rate in predicting financial performance in certain specific case studies. That level of foresight gives a CFO an almost unfair competitive advantage in the market.
It really does.
But to get that kind of predictive power, the AI needs unfettered access to all the data in the company. It can't just look at the neat and tidy general ledger.
And that highlights the true enterprise-wide power of Gemini. It acts as the intelligent connective tissue between disparate corporate data silos.
Connecting the walled gardens again.
Exactly. Historically, a massive headache for the CFO was that the CRM data lived over in Salesforce, the procurement and supply chain data lived over in SAP, the human resources and payroll data lived in Workday, and the core financial data lived in Oracle.
Right.
Getting all those deeply complex systems to talk to each other to generate a single unified forecast was a nightmare of manual data extraction, formatting, and fragile Excel modeling.
But with that agent-to-agent protocol we discussed earlier, that friction is gone.
Exactly. The CFO can now sit at their desk, open Gemini, and query a single centralized agent. They can simply type, generate a comprehensive cash flow forecast for Q4, accounting for all pending liabilities.
And the agent just handles it.
The Gemini agent seamlessly reaches out to the Salesforce agent to get the real-time, probability-adjusted likelihood of closing pending sales deals. It reaches out to the SAP agent to calculate upcoming, committed procurement liabilities. And it queries the Workday agent for projected, localized payroll increases based on new union contracts. It synthesizes all of that into a unified, real-time, highly accurate strategic view.
That is the holy grail of corporate finance, total visibility. And it's not just standard financial data they have to worry about anymore, right? If you look at the modern enterprise, the CFO's mandate has expanded massively into highly complex non-financial reporting areas, like ESG, right? Environmental, social, and governance reporting.
ESG reporting is incredibly complex, and frankly, it is keeping a lot of CFOs awake at night. CFOs are now legally responsible for reporting on climate change impacts under rigorous new international frameworks like IFRS S1 and S2.
Which means they have to look at physical risks.
Yes, they have to identify and quantify both the physical risks to their company's assets from extreme climate events and the transition risks of migrating their business model to a lower carbon economy.
That sounds like a data nightmare. To report on that, you have to pull data from localized energy bills across hundreds of offices, calculate supply chain logistics emissions, track fleet vehicle mileage. That is data that is notoriously messy, unstructured, and buried in PDFs.
Which is exactly why AI is no longer optional for ESG. It is essential infrastructure. The sources highlight a specific, highly impactful collaboration between KPMG and Workiva.
Oh, what are they doing?
They are using Gemini Enterprise to connect all this disparate, unstructured ESG data and drive confident, audit-ready sustainability reporting for Fortune 1000 firms. They're building specific AI agents designed to handle the massive routine data gathering, scraping those energy bills, reading the supplier emission reports, and performing the baseline compliance checks required for ESG frameworks.
So the agents do the grunt work again.
Yes. This automates the grunt work and allows the human sustainability teams to focus on the overarching strategic transition plan.
Okay, but I have to push back here because as a CFO, I'm listening to all of this and I'm thinking, this sounds amazing in theory, but in practice, it sounds like absolute chaos. If my HR team is buying their own AI tools to screen resumes, my marketing team is buying AI to write copy, my sales team has a different AI embedded in their CRM, and my supply chain team is using yet another tool. How does a CFO deal with this overwhelming AI sprawl?
It's a huge issue.
You end up with dozens of disconnected, ungoverned AI bots running wild around the company. IT can't keep track of them, the data is leaking everywhere, and no executive can possibly consume all the fragmented insights they are generating.
AI sprawl is a massive, highly critical risk, and it's something Stephen Chase, the global head of AI at KPMG, specifically warned about in our sources. If you just allow every department to buy a bunch of fragmented third-party apps, you overwhelm your people, you create massive security vulnerabilities, and you completely lose corporate governance.
So what's the solution?
The solution to AI sprawl is mandate a centralized platform.
Like using Gemini Enterprise as the foundational layer.
Yes. Or using proprietary solutions built securely on top of it, like PwC's Agent OS. The CFO and the CIO have to mandate a platform that acts as a secure switchboard or a central nervous system for the entire company.
So no rogue apps.
Exactly. Instead of buying dozens of disconnected point solutions from random vendors, you decree that all AI development happens within this single, governed, heavily monitored environment. And you build what are called reusable micro-agent patterns.
Micro-agent patterns, what does that actually mean in practice?
It means your core IT and finance team builds a single, highly secure, heavily tested AI agent that knows exactly how to securely pull specific data from the ERP. That is a microagent.
Got it.
Then anytime anyone else in the company, whether they're in HR trying to calculate bonuses or marketing trying to check ad spend against a ledger, needs an AI tool that touches financial data, they must use that pre-approved microagent as their building block.
They snap it in like a Lego piece.
Exactly. This ensures that strict governance, access controls, security, and data integrity are baked in from the ground up across the entire company, rather than trying to retroactively secure a chaotic patchwork of random apps.
So the modern CFO isn't just managing the flow of money anymore. They are increasingly responsible for managing the governance and the architecture of the company's entire intelligence infrastructure. It is a massive expansion of the role.
It's a completely new paradigm.
And to really understand the financial impact, the true ROI, and the sheer scale of these new workflows, we need to look at the organizations that are investing the absolute most money into proving them out. We need to look at the proving ground for the entire industry, which is the Big Four accounting firms.
The Big Four, Deloitte, PwC, EY, and KPMG, are the undisputed bellwethers for the entire global accounting profession. Where they go, the rest of the industry eventually follows.
No doubt.
And right now, they're currently undergoing a fundamental, existential rethinking of how accounting work is fundamentally done. For a century, their entire highly lucrative business model was predicated on headcount-driven growth. If you wanted to audit a bigger, more complex multinational company, you simply hired more junior associates out of college to bill more manual hours.
The classic pyramid we talked about earlier, the billable hour was the absolute lifeblood of the firm.
But the advent of agentic AI is violently shattering the traditional billable hour model. The Big Four realize that if they can automate the vast majority of the rote, foundational work, they can deliver faster, vastly more accurate, and more comprehensive results to their clients.
So how do they make money?
Consequently, they are shifting their billing models away from hourly rates and toward value-based pricing. They are charging for the strategic insight, not the time spent gathering data. And the sheer scale of their financial investment into this transition reflects this existential pivot.
The numbers in these sources are just staggering. They are hard to wrap your head around. KPMG has publicly allocated $2 billion to AI and cloud initiatives. PwC has committed $1 billion specifically to generative AI development. You do not spend $3 billion collectively on a software trend unless you expect a world-altering return on investment.
And the early ROI data heavily supports those massive investments. Organizations that are aggressively implementing these AI accounting automations are seeing a 30 to 300% ROI within the very first year of deployment.
Within year one.
Year one. We are talking about average annual hard cost savings ranging from £300,000 for mid-sized firms up to £8 million for large enterprises, depending on the specific processes they choose to automate.
The sources mention a specific company called JumpRope. They achieved a 400% increase in financial efficiency simply through deploying automated billing and custom AI-driven dashboards. 400%. Let's break down exactly what the Big Four are doing with these billions of dollars because it's a roadmap for everyone else. Let's start with PwC.
PwC has been incredibly aggressive in their rollout. They haven't just built a few internal tools. They have launched over 250 enterprise-ready AI agents globally, with over 100 specifically deployed in the EMEA region to handle highly localized tax regulations and multiple European languages.
And they are orchestrating all of this through that platform we touched on earlier, what they call Agent OS.
Right, Agent OS is their proprietary centralized platform built on top of Google Cloud's infrastructure. It essentially acts like an internal, highly secure enterprise app store for AI agents.
Oh, I see.
If a department head has a problem, they don't have to hire a developer. They just go to the OS and deploy a digital teammate that has already been tested for compliance. PwC reports that using Agent OS reduces their deployment times for new AI solutions by up to 10x and accelerates their overall operational cycle times by up to 8x.
And they have built specific branded agents within this ecosystem like Zora AI.
Yes. Zora AI is a prime example of a deep, highly specialized finance workflow agent. It handles end-to-end invoice automation, scanning the messy PDFs, extracting the data, validating it against purchase orders, and posting the invoices to the ledger in minutes without human intervention.
And does it do spend analysis too?
It does. It also executes complex spend analysis, consolidating global procurement data to automatically highlight cost-saving opportunities and forecasting potential supplier delays based on market data.
What about KPMG? How are they deploying their massive $2 billion investment into this space?
KPMG took a firm-wide adoption approach that is frankly astonishing for a highly conservative, heavily regulated industry. Instead of locking the AI in a pilot program with a few tech-savvy partners, they rolled out Gemini Enterprise to their entire global workforce almost simultaneously, and they achieved a 90% employee adoption rate within 2 weeks.
90% adoption in 2 weeks? Getting 90% of corporate employees to agree on where to order lunch on a Friday is virtually impossible. Getting an entire global accounting firm to adopt a totally new AI paradigm in a fortnight is incredible.
It speaks volumes to the intuitive nature of the Gemini conversational interface. Employees do not need to learn Python or SQL to use it. They just need to know how to speak clearly. In fact, KPMG employees have built nearly 700 of their own bespoke no-code AI agents since late September to solve highly specific workflow bottlenecks.
700 agents, wow.
They also created a dedicated tax AI accelerator program. This was designed specifically to train their tax professionals on how to safely, legally, and ethically integrate AI into their daily compliance operations.
And they are doing some really creative, almost entirely new things for their clients too.
They are completely changing client deliverables. They are deploying agents that can instantly generate massive, comprehensive RFP responses based on historical firm data, which saves thousands of hours of business development time.
That's a huge time saver.
And they are even using Gemini's multimodal capabilities to take incredibly dry 100-page tax strategy reports and generate interactive, podcast-style audio briefings. They send these audio files to their busy CEO clients, making complex financial reporting much more dynamic, engaging, and accessible during a commute.
Which is exactly what we were talking about with Notebook LM earlier, taking the raw data and changing the medium entirely. All right, what about Deloitte? What is their strategy?
Deloitte has massively expanded its strategic alliance with Google Cloud to deploy what they are calling a fleet of over 300 specialized agents. They are integrating these agents deeply into core business processes, not just in finance, but across customer service, procurement, and HR. They anticipate a baseline of a 30% productivity improvement across all teams using these integrated tools.
And they are building physical global infrastructure to support this shift.
Yes, Deloitte has established global AI experience centers in major tech hubs like Bengaluru and Cairo, physical centers. These locations allow their enterprise clients to come in, experiment hands-on with the latest Google Cloud technologies in a secure sandbox, and work directly side by side with Deloitte AI specialists to build custom, highly localized AI solutions for their specific industries.
Okay, I hear all of this. I hear about PwC's massive Agent OS app store, Deloitte's 300-agent global fleet, KPMG's billions in investment and accelerator programs, and If I'm the CFO of a mid-sized manufacturing company in Ohio, or I'm a managing partner at a 50-person regional accounting firm, I am deeply overwhelmed.
Intimidating.
If the Big Four are seeing up to £8 million in savings precisely because they have the capital to drop billions on development, how does a smaller firm or a medium enterprise even begin to compete? Are the mid-market players just going to be completely crushed by this technology gap?
It's a very logical fear. Historically, enterprise technology required massive capital expenditure. But the data reveals the exact opposite reality in this AI wave. Small and medium enterprises, the SME segment, are actually aggressively leading the adoption of AI in accounting. Currently, 58% of the SME organization size segment is actively adopting these tools, which is significantly higher than the massive enterprise segment.
Wait, why is that? How are the smaller firms affording to build this infrastructure?
Because they don't have to build the foundational infrastructure or train the underlying models themselves. Cloud-based, pay-as-you-go SaaS solutions completely democratize access to the intelligence.
Ah, I see.
An SME can simply subscribe to the Gemini Enterprise Business Edition for $21 a seat per month, or they can use a cloud accounting tool like Zoho Books or Xero that already has the AI seamlessly embedded. When they do that, they immediately get access to the exact same underlying world-class Gemini 3 reasoning models that KPMG and PwC are using.
Oh, wow.
The barrier to entry isn't a billion-dollar server farm anymore, it's a monthly SaaS subscription. The playing field hasn't just leveled, it is tilted in favor of the agile.
So the technology is completely democratized. The mid-market can move faster because they have less bureaucracy. But that brings up the ultimate existential roadblock for any CFO listening to this. The technology is amazing, it's highly affordable, it can do the manual work of 100 junior analysts, but corporate finance is heavily, heavily regulated.
Yes, extreme.
You are dealing with highly sensitive, non-public financial data, confidential employee salaries, unannounced M&A plans, and trade secrets. If I put all of my company's most sensitive data into a cloud AI prompt, how do I know it's not going to leak? How do we ensure this isn't a massive company-ending security liability?
This is the absolute crux of enterprise AI adoption. Without ironclad, legally defensible security, absolutely none of the efficiency gains we've discussed matter. A 400% efficiency gain means nothing if you breach client trust or violate federal law.
Exactly.
Google Cloud recognized this immediately and built a highly robust, enterprise-grade security framework for Gemini Enterprise to directly address these corporate anxieties.
What is the absolute golden rule of this security framework? What is the baseline guarantee?
The absolute non-negotiable golden rule is you own your data. Full stop.
Full stop.
When an organization uses the paid business, standard, or plus editions of Gemini Enterprise, your data, meaning the specific prompts you type in, the sensitive financial files you upload, and the AI's generated outputs are never, ever used to train Google's public machine learning models.
Okay, I really want to underline and highlight that point for the listener, because there is a huge pervasive misconception in the business world that if you type a secret into an AI prompt box, it immediately becomes part of the global hive mind, and your competitor can just ask the AI for your trade secrets tomorrow.
That anxiety stems from how consumer-grade free AI tools operate, and it's a valid fear in that context. But in the true enterprise environment, your data is cryptographically siloed. It is not used to train models for Google's public benefit, and it is emphatically not used to train models for other enterprise customers. Google does not sell your enterprise data, and they do not use it for targeted advertising. The boundary is absolute.
Now, in reading through the sources, there is a small but very important asterisk regarding something called a starter edition, right? We need to clarify that for anyone managing IT procurement.
Yes, that is a critical distinction to make. Google offers a free-to-use starter edition that organizations can downgrade to after their initial 30-day free trial of the paid business edition expires. If an organization chooses to downgrade to that free starter edition to save money, their data will, by default, be used by Google for product improvements and global model training. The administrators can manually go deeply into the IT settings and opt out of that data sharing, but it requires active intervention. However, for any paying enterprise customer on the standard tiers, the default setting is complete lockdown data privacy.
What about the timeline of data retention? Let's say a controller asks a highly sensitive question about a potential bankruptcy scenario. How long does Google hold on to the record of that prompt existing on their servers?
The default data retention policy across the system is 30 days. This retention is not for training. It is strictly maintained for technical debugging purposes and abuse detection, for instance, ensuring the system isn't being used to generate malware.
But can you change that?
Yes. Workspace administrators have granular, absolute control over this. They can override that 30-day default, shorten the retention window significantly, or disable prompt storage entirely. If they disable it, it ensures that the very moment the user closes the browser session, the prompt data is permanently wiped from the servers.
So that establishes the baseline privacy. But corporate finance, especially in multinational or specialized industries, has to comply with specific, highly rigorous legal frameworks. CFOs and IT directors lose sleep over alphabet soup acronyms. Let's walk through how Gemini handles the heavy hitters, because this is where adoption usually stalls. Let's start with the big one in Europe, GDPR.
The General Data Protection Regulation. It is one of the strictest privacy laws globally. For users located in the European Economic Area and the UK, Gemini ensures strict compliance by offering regional data processing. Whenever functionally possible, European users' data is processed strictly within EU-hosted data centers, preventing it from crossing borders into jurisdictions with different privacy laws.
So the data stays in Europe.
Exactly. Furthermore, Google incorporates standard contractual clauses and an automatic legally binding data processing addendum into all Gemini contracts for EEA users, ensuring all data transfers are strictly legal and privacy controls are maintained.
Okay, what about the healthcare sector? We talked earlier about hospitals and clinical billing data. IPA compliance is notoriously strict in the United States. Can a hospital finance team actually use Gemini to analyze patient billing?
Yes, they can. Gemini is fully enabled for IPA-covered workloads, which means it is legally permitted to process protected health information, or PHI. And this is a critical, but for any hospital administrators listening, it requires highly specific administrative actions before anyone types a single patient name.
Right, you can't just open a browser window on day one and start pasting in patient billing codes.
Exactly. The healthcare organization must first sign a formal business associate agreement, a BAA, with Google, legally binding Google to IK standards. Then, the internal workspace administrators must explicitly enable the regulated data flag at the project level within the Google Cloud Console.
Only then is it safe.
Once those specific administrative and legal steps are taken, yes, Gemini can safely and legally process PHI across AI workflows, whether that's complex billing analysis, claims processing, or summarizing clinical documentation for financial coding.
Moving over to the public sector, can government agencies or defense contractors who deal with highly sensitive national data use this technology?
Yes, and this was a major recent development. As of September 2025, Gemini apps and Gemini for Workspace officially achieved FedRAMP High authorization.
That's a big deal.
This is a massive, highly sought-after milestone in the tech industry. It means the platform has been rigorously audited and has met the incredibly strict, uncompromising security baselines required for deployment within U.S. federal agencies and by civilian contractors handling highly sensitive, unclassified government data.
And there's also a brand new certification mentioned in the sources specifically built for AI governance, right? ISO 42001.
That's right. Google was newly awarded the ISO 42001 certification in May 2025. This is a newly established global framework specifically designed for the safe, ethical management, and rigorous governance of artificial intelligence systems.
So it's not just security, it's governance.
Right. It sits right alongside their other critical ISO certifications like 27001 for general information security and 27701 for privacy management. It proved they aren't just securing the data, they are governing the AI's behavior.
What about companies that handle millions of credit card transactions? E-commerce giants, massive retailers, global banking.
Yeah.
PCI compliance is usually a complete nightmare for IT departments when introducing new software.
Gemini now fully supports PCI DSS version 4.0 compliance. This means retail and financial organizations can legally and safely use Gemini for payment-related workflows, such as advanced fraud analytics, customer identity verification, or transaction dispute resolution.
Any caveats there?
The requirement here is that they must deploy the AI within explicitly scoped Google Cloud projects that are architected specifically to handle PCI data.
So we've gone down the list. The major compliance boxes, GDPR, IPUPA, FedRAMP, PCI are all firmly checked. But let's take it one step further. What if I am a massive global bank or a top-tier defense contractor and my board's mandate is absolute network sovereignty, meaning I don't care how many ISO certifications you have, legally and structurally, I cannot let my company's data travel over the public internet ever, under any circumstances. Can I still use a cloud AI?
For organizations requiring that level of absolute paranoid lockdown, Google offers a solution called Private Service Connect, or PSC. PSE allows you to route all of your Gemini API traffic exclusively through customer-managed virtual private cloud endpoints.
Let's use an analogy for PSE because virtual private cloud endpoints is heavy IT jargon.
Think of the public internet as a massive, multi-lane public highway. Even if you are driving an armored truck, meaning your data is encrypted, you are still on a public road, susceptible to traffic analysis or incredibly sophisticated ambushes. Private Service Connect essentially builds a sealed subterranean private tunnel directly from your company's basement straight into Google's AI servers.
So it never touches the public highway.
It ensures zero data egress. The data never touches the public internet routing tables. It remains entirely physically and logically within the organization's private sovereign network architecture. Even if the public internet highway is compromised, your data is completely invisible and unreachable from the outside.
Zero data egress. A private subterranean pipe directly into the AI's reasoning engine. Okay, so if it's a system can be completely locked down, if it's fully compliant with GDPR, HIPAA, FedRAMP, and PCI, and we've proven the ROI is massive, what is the very first step an organization should take? Because if you are a financial leader listening to this, staring at this massive structural technological shift is paralyzing. It feels like trying to change the engines on an airplane while it's in flight. How do you actually practically start on Monday morning?
The sources provide a very clear, highly actionable roadmap for getting started without crashing the plane. It begins with a very specific directive. Week 1, conduct a process audit.
Week 1, a process audit. What exactly are we doing? And more importantly, what are we not doing?
What you are not doing is rushing out to buy the software licenses and telling your team to figure it out. First, you sit down and meticulously map your current human-driven accounting workflows. You talk to your staff, and you identify the top 3 most time-consuming, highly manual, soul-crushing processes in your department.
So finding the biggest pain points.
Yes, you quantify exactly how many hours your team spends on those repetitive tasks each month. You document your current human error rates, and you calculate the hard financial costs of the rework required to fix those errors.
You are establishing a rigid baseline. You can't possibly prove a 300% ROI to the board next year if you don't know exactly what the process costs you today.
Exactly. Establish that undeniable baseline metric. Then, and only then, you select a single, highly specific process for your initial AI deployment. The gold rule of thumb here is, choose high-volume, low-complexity tasks first.
Don't boil the ocean.
Do not try to automate your most complex, nuanced M&A strategy on day 1. Target quick, undeniable wins that demonstrate immediate value to the skeptical team members and the executive board.
Like the invoice data extraction we talked about earlier, or automating the initial bank reconciliation.
Precisely. Limit the scope to a highly manageable pilot project. Set a realistic short timeline, say 30 days, and execute. Once you prove undeniable success on that single high-volume task, you alleviate the internal fear. You earn the cultural buy-in from your team, and you secure the financial buy-in from the board to scale the technology into more complex strategic workflows.
Start small, win big, and scale fast.
That is the proven formula for surviving and thriving in this massive transition.
Which brings us to the end of our deep dive today. Let's synthesize exactly what we've covered because the ground is moving quickly beneath our feet. If you are listening to this, regardless of your title, your reality is changing.
It absolutely is.
Whether you are a staff accountant tired of burning your weekends parsing endless PDFs of messy invoices, a controller hunting through millions of rows of transaction data looking for a single fraudulent anomaly, or a CFO trying to model complex global budgets against highly unpredictable climate transition risks, Gemini Enterprise is fundamentally upgrading your workflow. We are moving, as an entire industry, from a world of manual, retroactive data processing to a world of real-time strategic oversight. The shift from a heavy pyramid workforce of data entry clerks to a sleek diamond workforce of AI-fluent strategic experts is not some distant sci-fi future prediction. It is happening right now, this quarter, driven by billions of dollars of investment from the biggest firms on Earth.
The underlying AI models have achieved reasoning capabilities, the software interfaces have been completely democratized for the mid-market, the security frameworks have achieved the highest levels of enterprise and government compliance, and the corporate mandate to adapt is undeniably clear.
But as always on this show, we want to leave you with something deeper to chew on. A final thought that pushes beyond the specific workflows, the ROI metrics, and the software updates.
Consider this broader implication. If agentic AI successfully standardizes perfect regulatory compliance, if it delivers instant, flawless month-end closes, and if it guarantees perfect anomaly detection across every major corporation in the world, then basic operational excellence will no longer be a competitive advantage for a firm.
Right, because everyone has it.
It will simply be the expected baseline. Everyone will have perfect numbers. This raises an important, arguably existential question for the profession moving forward. When every ledger in the world is perfectly, instantaneously powered by AI, does the true premium value of a human finance professional shift entirely away from the mathematics and exclusively toward human empathy, creative strategy, and ethical leadership?
That is the real shifted ledger. When the math is guaranteed to be perfect, what is the human actually worth? Thank you so much for joining us on the Shifted Ledger. Stay curious, start mapping out your own workflows this week, and we will catch you on the next one.